Whereas Bitcoin now has a 15-year track record of grinding higher through volatility, being tested in multiple different ways, and kind of just slowly being explored by more and more people. It is a pivot from how money has been working for like a century and a half. And I think that's where you realize it's not a one-decade adoption story. It's a multi-decade massive trend change in how money works. I think over the long arc of time, it starts eating into savings accounts, it starts eating into sovereign bonds, it starts eating into things that we monetize for lack of good money.
Historical data shows that the vast majority of investments perform poorly. This is true for bonds, stocks, and real estate as asset classes. Nearly all of it makes for a bad investment for outside passive investors. Lyn Alden, a macroeconomist, highlights the remarkable 15-year journey of Bitcoin, showcasing its consistent rise in value amidst fluctuations. She foresees a future where Bitcoin slowly but surely challenges traditional savings accounts and sovereign bonds, reshaping the landscape of financial assets that once served as substitutes for stable currency. It's not a one-decade adoption story. It's a multi-decade massive trend change in how money works, she added. The number of cryptocurrency owners increased by 34% to 580 million in 2023, according to a January 2024 report by Crypto.com. In 2023, Bitcoin holders surged by 33%, soaring from 222 million in January to 296 million by December. This cohort now represents over half of all global crypto holders. The pivotal factor driving this expansion was the emergence of Bitcoin exchange-traded funds, ETFs, according to the report. Alden emphasizes that this transformation will unfold over decades, not years, cautioning against overestimating the speed of change while underestimating its ultimate impact. Regarding the advent of Bitcoin exchange-traded funds, ETFs, Alden sees this as a natural progression facilitated by the fiat system, which validates Bitcoin's status as a mainstream asset. Australia is set for a wave of Bitcoin exchange-traded fund launches, following in the footsteps of the US and Hong Kong, as issuers like VanEck Associates Corporation and BetaShares Holdings PT line up for listings. Ready to uncover more insights? Remember to subscribe to our channel and turn on notifications always to get our latest content.
Bitcoin's over $1 trillion market cap. Those combined, I mean, the global wealth, depending on what measurement you look at, is something like, 500 trillion or 1,000 trillion, which is a quadrillion, right? So Bitcoin is like a fraction of 1%. I think over the long arc of time, it starts eating into savings accounts, it starts eating into sovereign bonds, it starts eating into things that we monetize for lack of good money. And this, during the phase where that's happening, that can be disruptive. Like if you're invested in things that are getting disrupted by Bitcoin, that's obviously not going to feel good. Nation states are going to push back on it in various ways. They already have, in various capacities for the past 15 years. It's going to be this ongoing story. But in the long run, not monetizing housing is good, because if you monetize houses, meaning if you're wealthy and you don't know what you do with your money, so you just buy extra houses, that's not good for people that actually want those houses as a utility good. They want them to be as cheap as possible. So there are costs of monetizing utility assets, and Bitcoin can, over the long arc of time, address that. But I think that's, even when Bitcoin is 5 times bigger than now, it's still a drop in the bucket compared to global assets. So I think that, again, this is not it's not a 1 year or 3 year, 5 year story. It's not even a 10-year story. That's a multi-decade story. And so with technologies, people often overestimate the speed and then underestimate the final magnitude. And I think that's going to be true for Bitcoin. I think people routinely overestimate the speed with which it will fundamentally change the system, quote unquote, the system. But I think that they underestimate the magnitude of what it can do over, say, a 30-year period or more. Like the transformational change that can happen with how we do payments, what things we decide to store our value in, the success rate of our investments. People, when they don't know what else to do, they invest everywhere. They just kind of invest into all sorts of malinvestments. And actually having kind of a default really good savings units increases the thoughtfulness with which you decide to actually put that money into. With the ETFs, the way I phrase it is that Bitcoin didn't create the ETFs. Bitcoin is just Bitcoin. The fiat system made ETFs for Bitcoin. And so that's something that the fiat system decided to do. And I think that it was inevitable. If you go to $1 trillion asset, you're going to get ETFs made on you. That's part of the, it's both good because it scales it to more people, and it can be bad because it can be centralizing. So this was a test that Bitcoin was always going to have to go through. Fee congestion on the main chain, that's a test that Bitcoin was always going to have to go through. Debates about scaling, that's a challenge that Bitcoin is always going to have to go through. So instead of viewing each one of these things as a catastrophe or some sort of big thing, it's like, no, this is just another step along the way that anyone with foresight would see that this is a test that Bitcoin has to go through. And so I think that it's the best way to look at that is to say, what can I do to make sure Bitcoin meets that challenge well? And of course, millions of people can all have their own little way of making sure that it gets past those challenges.
Bitcoin's price has been on a roller coaster ride since it first debuted in January 2009, but the long-term trajectory has been higher, up and to the right. Bitcoin ushered in the age of cryptocurrency, but it took quite a while before the public sat up and took notice. Still, in little more than a decade, cryptocurrency, and in particular Bitcoin, has become one of the most exciting trading opportunities in a long time. Bitcoin launched in 2009 as the first decentralized blockchain network. According to our historical price data, Bitcoin was trading at roughly $0.05 per coin in July 2010. Fast forward to today, Bitcoin is changing hands at above $60,000, up close to 137 million% since its early days. Lyn Alden suggests that Bitcoin's impact surpasses common perceptions. While some see it as merely another addition to existing monetary systems, Alden contends that it fundamentally diverges from traditional money practices. She divides monetary history into 3 eras, underscoring the increasing role of intermediaries in transactions and settlements since the introduction of the telegraph. Now, let's redirect our attention to a video.
One thing to emphasize is that Bitcoin is a bigger change than most people realize. They often think it's just another monetary technology that kind of goes on top of our other monetary technologies. Whereas one thing I've been trying to emphasize is that it is a pivot from how money has been working for like a century and a half. And I think that's where you realize it's not a one-decade adoption story. It's a multi-decade massive trend change in how money works. And what I mean by that is, I kind of separate money into 3 eras. The first era was pre-telegraph, right? So, and I focused a lot of this in my book, Broken Money, but to kind of summarize it, pre-telegraph, you had transactions and settlements moving at roughly the same speed, which is the speed of matter. You couldn't send information long distances quickly. And so the role of middlemen was, useful, like things like basic banking services on top of Bitcoin, on top of gold, basic money transmission services on top of gold. These things were relevant, but this was a world where middlemen were relatively thin because of that transaction layer and the settlement layer having roughly the same speed. But then we entered a world ever since the telegraph and extending through today, where information can now flow around the world quickly, but settlement still cannot. And settlement basically means giving someone value that can't be reversed, right? And so, other than physical gold and things like physical transfer, there's not really been a way to do settlement of monetary value. And so what that meant is that for like 150 years, since the telegraph became widely adopted, it's only made middlemen get bigger and bigger and bigger because the speed of transactions keeps increasing. We have the telegraph, then the telephone, and then now we have the internet, and then you have obviously mobile internet. All of that keeps increasing, but there was no physical settlement that could keep up with that, and so that role was entirely filled by middlemen, basically centralized maintainers of the ledger. And what Bitcoin is that ever since 2009, we finally have fast settlement for the first time. And so that actually closes a speed gap that had been building up for a century and a half. And so almost every friction in finance was solved by another layer of centralization, right? So it's like if I want to send money to you, we use a third party, a bank. If banks want to send money to each other, they plug into like a bigger bank. If central banks around the world want to settle value with each other, they plug into whatever the biggest central bank is. And so it's just more and more layers of centralization kind of solving all of the inefficiencies of finance. But what Bitcoin does is it finally says, here's an efficient way to move value around that actually decentralizes it. And it's not just another tech on the transaction layer, it's a tech on the settlement layer. And so you can actually de-abstract and de-complexify a lot of what's happening in finance and money. And so even though it's a technology that actually can simplify a lot of things in finance. And so I view it as a massive trend change. And it's something, it's not a decade story, it's a generational story. It's a multi-decade change from how a multi-$100 trillion system works to how it's going to work in the future.
Bitcoin has had a very eventful past, both in terms of development and adoption. This has translated into very active price movements. The first recorded Bitcoin trade was executed at $0.00099 per coin, whereas now, 15 years later, the currency is trading above $60,000. While Bitcoin already peaked at a new high of more than $73,600 in March 2024, many analysts believe that the next bull run could take Bitcoin above $100,000. We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.